Good morning, ladies and gentlemen. Welcome back. I've been slacking off a little most like these couple days, mostly because as you can probably tell, the market is not doing very well. The majority of the coins that I'm watching right now is in the red, deep red, as a matter of fact, with one exception of AVAX. That's Avalanche is doing exceptionally well. But everything else is kind of in the poopers. And the trend wise, a lot of the coins are not looking very good because Bitcoin is kind of in this downward trend for the last 5-6 days. And so based on what the trend looks like for the last 4 or 5 days, unless Bitcoin has made a significant jump above the previous support resistance line at 47,200, we're probably going to see another day or two of downward trend. So I know things are not looking very good, and this might be the beginning of another long and horrifying downward trend, like what we had since the previous high. But we've had this pretty good upward trend for the last, week, for the last 2 months. Things needs to rest a little. So I'm not surprised if Bitcoin decides to take a rest. However, the good thing is that if we were to look at the chart here, right? If you look at this area where I have circled out, as a matter of fact, it's a square. It's a rectangle. It doesn't matter. This area that I have outlined, you can pretty much see that there's a very, very strong support right here at 44,000. So this is a good sign. This is a good sign because every time when we hit 44,000-ish, the price bounces back up. And it means that we have pretty strong support here at 44,000. And if the price gets tested a few times and it won't be able to break it through 44, or even if it breaks through, the price bounce back up quite quickly like this, we will probably be seeing another upward trend. But that's just a baseless estimate or speculation of where the market is going. It's really difficult to tell, and it's almost impossible to know what the market will look like, especially in a short time frame, like within the next few days. So prepare for the worst, but hope for the best. Today, I'm going to actually talk about what to do when the coins or when the product that you're looking at is suffering some significant drop, right? There's actually a lot of people tend to look away when the price drops like crazy, like what has happened today, right? It's definitely putting a lot of pain on you and your wallet. If you focus yourself on the dollar amount that you've lost for today, I can guarantee you it's going to be a very, very painful process. But if you can manage to look away and focus on not only how much you've lost, but also what kind of opportunities are being exposed right now, you will probably find something that's worth trading. Like for myself, I actually I love when the price drops like this, because when it drops like this, it usually means it's gonna have bounce backs. Look, bounce backs, bounce backs. And if you can manage to get in at these bounce backs, you're gonna make some pretty good profit, right? Like this has happened at least 6-7 times in the last 2 days or 3 days, right? So there's a lot of opportunities like this, and look at this, right? This is significant bounce back. So when market drops, when the price drops like crazy, everybody's complaining about, oh my goodness, what happened? Stop panicking. All right, there's no need to panic, because you cannot, even if you panic like crazy, running around like a headless chicken, there's no way you can control the market. The market's going to do whatever it wants to do. All right. All you need to do, or all you can do, is to accept the fact that the market, number one, is dropping. Number two, look for opportunities. Number three, always have a stop loss at the price level that you think it needs to get out. That's why, because, especially with coins, right? Cryptocurrency, they go up and down like crazy like this. If you don't have a stop loss here, you're gonna lose a lot of money here, right? That's why always have a stop loss. Always have a stop loss. Always have a stop loss like this. Then you could have saved yourself a few thousand, even, your house's mortgage. And I don't recommend you to take out a second mortgage just to invest in cryptocurrency. It's just too risky. If you're doing that, stop listening, liquidate all your possessions, and then find a job. All right, don't do that, because it's super risky. And so let's take the most recent drop as an example to look for opportunities. All right, and usually the first thing that you should do when there's a price drop is to look for where the price will probably stop. How do I know that, you may ask? There's actually a few techniques that you can use to estimate where the current drop is, when the current drop will end, or the price level of the current price drop will be ending. All right, so the first one is to look for previously established support. All right, so in our case, we have a very, very clear support here. So, and you can only do this by having by looking at the chart from a larger time scale, like 4 hours a day. Daily time frame is also a very, very good time frame to look for major support like this. So you can easily put your support here. All right, so this one breaks it a little bit, but it's okay. We try to find the support line that crosses the most number of candlesticks. All right, and then we try to find the cleanest one. So this seems to be it. Your eyes will be able to tell you. All right, your eyes will be able to tell you. And in our case, this is the current support line that we'll be using. And just because I do this, you don't have to do it, but I like to mark off my support lines. I want to know if it's a 4 hour, if it's daily, if it's hourly support, resistance. It helps me to make decisions much easier, so that I know, this is going to be a big support or resistance. So after you've set it out, all right, when you see drops like this, it's very likely that a downward, a short candlestick will stop at the brink or at the edge of the support line. In our case, look at this. All right, so this is where it stopped. The price went as low as 44,700. So it's very close to the previous stop, and also we're at 44,400. So when you see something like this, all right, and you can, zoom in a little bit, maybe looking at the 15 or 5-minute time scale, and look for where the price is going, right? It goes down here, and it might not stop, but then when it gets close to, when it gets close to your previously identified support, this is when you should pay attention to, because if you see a very, very long downward shadow, like a wick like this, it means that, people are buying up, and it's probably safe to buy somewhere here, and so that you can take advantage of this deep drop. Some people use RSI. I don't use any of those indicators just because I don't like my chart messy. You could also use RSI, but I don't find RSI accurate, actually. RSI is a relative strength index. It basically tells you when the current market is oversold or overbought. But in our case, look at here. So this is in the oversold area. This is in the oversold area. So when it's oversold, indicates in the oversold area, you should probably get in. But I don't use RSI. Some people find it useful. I don't have consistent results with RSI, so I don't use it. You can, verify it, validate. It's best that you can use RSI with your own indicator set to come up with a system that has a higher probability of winning. But don't just use one single indicator. It's a disaster. Well, I mean, if you just use one indicator, it's probably going to be not work because of the lower probability. All right, and once you see candle bars like this, right? It goes. This is stupid. It starts going like this. Then the first one, the second one, the third one. So can you see some patterns here? The pattern here is that you go low, right? Lower low, lower high, lower low. Okay, not so lower high, but higher low, or not so high, not so lower low. Then you see, can you see this? So basically the pattern looks like this, right? It goes down, then got pulled up quickly. This is a pattern that I recommend you all to get familiarized with, because when this happens, it's usually a good sign saying that the current trends will be reversed. Because if you follow Dow's theory, right, the trend will be lower low, lower high, lower low, lower high. There will be the downward trend, but suddenly you get a not so lower low, but a higher high. See, this is when you should get in right here. This is also a good point of entry if you are trying to catch the bounce. So this is also a good point. And the other way of doing it is, so if you look at, usually I do this from the 4-hour time frame, all right? So when we have something like this, right? This is a big major candlestick. If you remember, I sometimes talk about atom theory of the market. What it really is it can kind of estimate or kind of forecast when and where people will try to get out of the market by flipping the current candlestick chart. So what it does really is, if you have a candlestick that looks like this, right? You take a screenshot of it and flip it 180 degrees, then match the body of the candlestick. And usually this will be colliding with the lower end of the market before it hits back up. And look at how closely it is with the low point of the market. Can you see? Right? So we've actually hit the low point of the market already within the first candlestick bar. And we are going to zoom in and try to find point of entry. And the best point of entry, as I was saying, is if you can find, I usually do a 15-minute time frame. It's easier. You can do 5. It's when you see the lower lows are no longer there. So this is the best point of entry. And if you got in here, you would have enjoyed a very healthy profit between 45,000 to 45,700. So this will be $800 profit per Bitcoin that you've put down. Usually I put down 5, so this will be a $4,000 profit for me easily, right? And when do you get out? When do you get out? Because this is us trying to take advantage of the bounce back, right? By saying it's a bounce back, it usually means that there's an opportunity for it to come back down. When do you get out? There are also 2 ways. First of all, it's you identify your bounce back top limit by looking at the by setting up the resistance, right? When your price is hitting the resistance, you get out. So actually, right now it's probably the best time for it to get out. Will it go up like this? It might, but always keep in mind that you are trying to catch the bounce. You are not trying to stay in the market for the long run, because the current market condition is still on the shorting trend. Although the trend changed a little bit, right? This has changed slightly, but I would still wait for a very, very firm step up before the resistance gets converted into a resistance, into a support. Before I will wait for that signal before I actually go full in, or at least to resume to my regular kind of longer trend trading strategy. But right now, because we are trying to look for the bounce back opportunity, this is probably when you should get out. Look, it's already people are selling now. So the other way really is, go to the bigger time scale, do Adams market theory on the first chart, and then blah. Okay, so it's telling you between here and here, right? So 46,000 and 45,700. You should get out, and this is about it, right? So I will always, if I were to do it, I will be getting out right now. So yeah, you can do this almost every time it works. Like when people are greedy, when people are fearful, right? You become greedy by looking for opportunities like this. Because it always bounce back. Even if it doesn't work, even if the market decides to keep on going like this, it'll bounce back, then go down like this. Just like what we had seen here, right? Bounce back, down, bounce back, down, bounce back, down. So what you're looking for these bounce back opportunities during a downtrend market. You can always make some level of profit if you're careful, but always keep in mind that this is what you need to do. You're not in here for the long term. Don't change your trading plans. Set up your trading plan prior you getting into the market, and execute it when it's time to take profit, right? Because looks like we're gonna have a smaller resistance here. If it doesn't break out, it could go down again. All right, it could go down again. But keep in mind that this is not a way to predict the market. It's very, very difficult, almost close to impossible to predict the market. Don't try to predict the market. Work with the signals that you have, work with the systems you have, execute. And if you have a bounce back, like if you have the profiting off the bouncing back mechanism, this is it. I use it extensively. This is actually how I make the majority of my money, by taking advantage of the bounce back, especially for Bitcoin, right? You can do this with the with the cryptocurrencies that has a larger trading volume, or things that fluctuates up and down, but especially with Bitcoin and Ethereum, this capturing the profit from a bounce back always works. Look, you can retrace, right? There's always opportunity for you to try to capture the bounce back, and you just need to be less greedy than you usually are, and flee the scene, take the profit, as long as the trend is not continuing or hitting your take profit line. All right, so that's my profiting from the downward trend strategy. Well, if why don't you short the market? Some people may ask. For myself, because I'm very good at doing holding long positions. I'm not very good at shorting. And in order for me to clear my head and focus on the 20% that works the best, I've decided to only take long positions, even when I know for sure that there's a very, very high probability the market will go down. I will not open any short position, because that's not part of my trading plan. My trading plan is to hold only long positions, and this is how I do it. But yeah, that's pretty much it. Let's do a quick market analysis. Maybe that's why you're here, but that's part of a thing that I need to do. Even though the market is not doing very well, we still need to look at aside from the bounce back, where could we be waiting for opportunities to trade. So let me readjust my microphone a little bit. So right now, let's look at Bitcoin. All right, switch back to the daily time frame. I kind of covered Bitcoin a little bit when we first started. Right now, on the daily time frame, Bitcoin, unfortunately, is in this downward trend. If I moved up this support resistance to make it, a little bit more sense, this is actually a bit concerning to me, right? If we don't make a comeback quickly like this, the trend will not be reversed, unfortunately, and chances are we might be seeing something like this and hitting somewhere even 40,000, 38,000. I don't know. I don't know. If people tell you that they know exactly where the market is heading, well, some people are confident. I'm not, so I can't really tell you. However, if let's do a market, Adams theory of the market, and then let's flip it up. If this candlestick ends up being exactly like what it looks like now, we might be heading towards 40,000, 39,000. That's concerning. All right, so I don't know. Let's wait until today's candle bar to to finalize. There's in like 5 hours and 22 minutes. I'll definitely post an update in that time. But right now, I would, if you want to get into the market holding long positions instead of trying to capture the bounce, well, the bounce just finished, right? If you're not, skilled enough to do that, I would recommend you to stay out of the market, unless you're trying to short. If you're trying to short, then it's probably a good opportunity for you to try out shorting, because let's zoom into the 4 hour. All right, so there's a clear line, support and resistance line here, right? And we are not doing very well. So this is one of the possibility. This is another possibility. So the deal breaker will be whether or not the current price will be stabilized above 46,000. So right now, because the bounce back has finished, I will not be opening any positions. Oh, okay. It's good that we got out of here, right? So we'll have to wait. We will have to wait until the price can stay above 46,000 before opening any long positions. I'll adjust it a little bit so that it's more clear. And then what I'll do is I'll set up alert here. And I will only get in if the price breaks 46, comes back, retesting 46,000, bounce back a little bit, reconfirming that 46,000 works, then the probability of the price to go back up will become a lot higher. But right now, I would just let it be. Even though if some people believe in the moving average, like 20 moving MA20 type of line, right? You already have your candlesticks here. Chances are, right, it could go up from here. It's still a bit too risky for me, and it's not part of my entering signal. My entering signal is break, comes back, retest, then this is where I will get into the market. All right, so that's for Bitcoin. The only thing we can do right now is to wait. It's not a very, very good sign. Do something else. Read up a book. Play with our kids. Just don't. There's no need on waiting for Bitcoin. You really need to wait until the trend to come back on. If you didn't get in here, right? If you got in here, take a profit now. You don't know what's gonna happen around here. All right. So Ethereum, yeah, it's pretty much the same thing. If I were to, let's look at the day. Okay, all right. It's actually better because Ethereum has been doing reasonably well with the burning and the NFTs. People have been buying up Ethereum to trade a lot of other things, and this price increase, this has become the most recent high, I would say, but right now it's testing very heavily against the 3300 support. If this support doesn't break, then we can safely assume that it might consolidate around here before it comes back up. So we'll just have to wait until, actually, yes, the support, it's gone. We'll have to make sure that the price comes back up, and as a reconfirmation of what the trend has reversed. If not, then look at this, right? I don't know what kind of people in their right mind will want to be buy here if without, confirming that the price is consolidating around the support line before it keeps going. All right. So stay away from Ethereum. Not going to be a pretty sign if the support doesn't break, if the support doesn't hold, that is. A quick confirmation of using Adams reflection theory. So we might be seeing here. Ooh, so the first one will be 31. And actually there's a big jump here, right? Let's just try to be creative and if it doesn't hold 33, then the big one will be at 2700. Wow. Yeah. Yikes. I don't want that to happen. Nobody wants that to happen. But if the market decides to go there, there's nothing we can do but to trade with the market. So what should we do now? Because I've already set up Bitcoin's alarm, I will set up another one here, and then I'll wait for Ethereum to consolidate above the support resistance line at around 3,300 before I can make any further trading decisions. But right now, I will stay out of the market. Just stay out of the market. It's just too risky. But if you're the guy who enjoys risk and then have unlimited, amount of money, right, do whatever you want. Like you're spending your own money, not mine. So, all right, and yeah, still too risky. I don't think it's a good idea to get in right now. Okay, so that's Bitcoin and Ethereum. The rest of them are still, because Bitcoin is having a hard time doing the best, I will not be trading other coins too actively. With one exception, Avalanche is doing amazingly well. Let's look at Avalanche. Okay. Wow. So I got in here yesterday. I still have my positions open at 40, 48. I actually sold half when it made a retest of the 45. I should have bought more, but you don't know, right? It's probably a good idea to get off the market, to take profit now. I will liquidate my position if the price can't go beyond this previous high here. And it looks like we can safely expect that if the price can break through 50, it will be going up very, very high. All right. If it doesn't, then it will probably quickly bounce back down to 38. Still very risky. Don't get in now, just because that's. Avalanche is probably one of the few coins that are still going up despite the major crash. I will wait for price to either go here or here, but I will liquidate at around this position because it's time for me to take profit. If you don't take profit, what kind of trader are you? All right, so this is pretty much it. There are still opportunities like DYDX is a good coin. I would watch very closely, because the DYDX exchange is one of the best decentralized exchange there is. It has a lot of volume and run by reputable people. The coin has made some pretty interesting influences. I don't know what to say, but if you were to compare the market valuation of DYDX to other similar decentralized exchanges, you will find that DYDX is a lot undervalued. So I would buy DYDX spot only when the price it's right. But right now, with the entire market going down like this, and the bounce back is almost completed, finished, I will be patiently waiting for the price to hit back up to hit back down to $10. This is 10, right? Yeah, this is $10. I'll just wait at 10, and if actually it breaks this support, then I'll probably get some. I'll probably buy some coins. But let's wait. Just be patient. Patience makes profits. It's always a good idea to be patient. Never rush into the market with your hard-earned cash. All right, it's never a good idea. There will always be a better opportunity. All right, so that's it for this morning. I'll come back and do the market analysis again later this afternoon, just because what the market looks like right now. I think it's very important to stay on track. Okay, thank you for your time, and I'll be seeing you later.